So one of the ways we generate ideas is to look at industries that we might be very familiar with in Australia, for example, the banking industry, and then we might look around and compare the valuations around other parts of the world. So Australia at the moment, if you're looking at the clock, we're probably somewhere near 12 o'clock. We've got a rampant property market and the risks are very high, but the valuations for the banks are also very high by global and historical standards. If you look at America, the problems they've had since the GFC have been cleaned up, and now we've got a very slowly recovering house price cycle and home building cycle, but very safe and somewhat attractive valuations, although the story is largely played out. But then if you go to Europe, you're probably only in maybe the second or third innings, where you're only just starting to see a real economic recovery, and the banks are trading at around 1 point book value or tangible book value, with return on equities going to 10% plus, and so we see them as much more attractive than the Aussie banks, for example. Look, I won't use the banking industry, but I'll use a company called Baidu. It's a Chinese company. It's listed as an ADR in America. It's basically the Google of China. And so everyone's very familiar with Google, or Alphabet as it is now. It makes most of its money from Google search and advertising. Now, Baidu is pretty much the same, but it has the Chinese market to itself. Google was essentially kicked out of there many years ago, so it has an 85% market share. Now, if you buy Google today, admittedly the comparison isn't exactly apples with apples, but Google trades at about 30 times earnings. And there's some other assets in there like YouTube, which are valuable too. But if you look at Baidu, if you take out the money that's being spent on artificial intelligence and other moonshots, the underlying search business is trading about 12 times free cash flow. So that's a huge valuation gap for what is a similar business. The difference is that Google's firing on all cylinders at the moment, whereas Baidu has been suffering from a regulatory clampdown on medical services advertising, but we expect that to go away over the next year or two and see earnings growth come back. And because that multiple is so low, you've got lots of room for the multiple to come up in a way I don't think you have with Google.